Inflation. What are the causes? We'll be discussing some of the main causes of inflation according to economic theory and how it relates to the real world. First, we'll talk about inflation caused by changes in the money supply. As this is the most well-known cause, money printer go burr, after all. So what exactly does it mean when people talk about the money printer? Is it as simple as some governments just firing up the printer and going wild? Well, yeah, sometimes. Inflation of this type has actually been fairly common throughout history, too. Though since they didn't have printers, they got a bit more creative with it. In Rome, it became fairly common for the currency to be debased, which is a fancy term for making silver coins have less silver in them. It got so bad that a silver coin known as the Antoninus went from about 90% purity of silver all the way down to under 5% prior to the 3rd century. And then after the crisis of the 3rd century, they decided the only way to get out of their financial obligations is to just keep debasing. Nearing the end of the 3rd century, there was no silver in these coins at all, leading to what resembled modern hyperinflation throughout the empire. The irony of this particular coin is it was created in response to the debasement of the denarii, which was the standard Roman coin for a long time. The Romans were many things. Great economists, they were not. Debasement was not just something that was done by governments at the time either. Counterfeit currency had always been an issue, ever since the concept of money was invented. But there were other, more interesting methods of debasement practiced wherever there was coinage. Have you ever wondered why quarters and other coins have grooves on the edge? It's to protect them from a practice known as clipping. Coin clipping is the practice of shaving a little bit of material off the coin, collecting it, and then selling it for a profit. Coin clippers used a variety of methods to extract material. Sometimes they would simply shave around the edges of the coin with a file and remove just a little bit of material. Nobody would notice. Sometimes they would put the coins in a bag and just shake it, then collect the metal that came off. Who would suspect a coin that's just a little bit worn? Sometimes they would be as brazen to just punch a hole in it. The craftier ones would fix it up so it's a little harder to tell. All these methods had the effect of increasing the amount of coins in circulation, while also increasing the supply of gold and silver, which led to a cycle of increasing inflation. Several institutions were later created to address this issue, which is why we have things like grooves on coins. Although due to modern inflation, these grooves are purely for decoration. It's not worth your time anymore to clip coins, since the material is so cheap. And debasement's a funny thing. Today we understand that if you're holding a $20 bill, it's either worth $20 or it's counterfeit and not real. With the coin, you can have two coins with the same face value, but one of them is made of pure silver and the other is just a copper coin. One of them is worth way more than the other. It's hard to imagine today picking up two different $20 bills and saying one is worth more, but they still both are real. In the modern age, the worst hyperinflation ever recorded took place in Hungary in 1946 after the end of World War II. As in Germany, the hyperinflation that occurred in Hungary was a result of a requirement to pay reparations for the war. Due to the fall in tax base, prior fiscal policy that discouraged savings, public mistrust of banks, and no other way to pay for anything, the Hungarian government had the brilliant idea to print their way out of this mess. As a result, economists estimate that the inflation rate of Hungary reached around 41.9 quadrillion % per month. During this period, prices in Hungary doubled every 15 hours. Inflation of the Hungarian currency was so out of control that the government issued an entirely new currency for tax and postal payments. By August 1946, the total value of all Hungarian banknotes in circulation was worthless. And I mean really worthless. All the Hungarian money put together was valued at 1/10 of a US penny. Similar stories can be found in post-World War I Germany, nationalist China, Yugoslavia, several other places as well. Usually this type of economic mismanagement comes following wars, civil or otherwise. One of the notable modern examples is Zimbabwe, which experienced massive inflation following a rampant increase in money printing due to failed economic policy. In this case, they kept increasing the denomination of the currency, making older notes worthless. The increasing denomination gave us this wonderful banknote, the $100 trillion bill, which is worth about as much as Monopoly money. So what's happening in the United States today? Well, we're nowhere close to hyperinflation at nearly the scale that we've seen in the past, but it's not good either. Money creation is a normal thing that happens in a country to keep inflation low and at a somewhat stable level. As production expands, so too does the money supply to keep up. In the last 2 years, though, there was a massive growth in the money supply. The money supply saw a gigantic spike in 2020, and the increased rate of growth is still here today. From the beginning of 2020, it grew by 39%. Almost 40% growth in just 2.5 years is huge compared to historical trends. Since 2000, we would see about 4.5% increase per year, whereas in the last 2.5 years, we're seeing about 14.4% increase per year. Much of this new circulating money is held back by the velocity of money being lower. The velocity of money can be thought as the number of times a dollar is used each year on average, or how fast the money is moving, hence velocity. The velocity of money being lower means that there could be more dollars in the system without it impacting the price of goods. As long as the velocity stays lower, the money supply will just sit in people's bank accounts and ward off inflationary pressure from the increased amount of cash. Though, as the economy opens back up, who knows what will happen to the velocity of money. Thank you for watching. If you would like me to create more content on the other causes of inflation, please like and leave a comment.